Hello, hello. Hope you're well there. So we're about to begin our class. We had said we usually have an online both Tuesdays and Thursdays. So today is our Thursday class. So we should begin now in the next few. So for today, I'm introducing you now. Last time we did a more of introduction. So today I'm gonna go to a little bit. Joseph. Hello, Joseph. Hey, Fiti, umenitupa. Ni mtu wa usiku. Wewe ni mtu wa usiku. So, guys, just a minute. So, account tunaweza malizia leo? Na uko sawa, tuweke hiyo thao. Nimekutumia pia results za hiyo bot. Simeona bado ina perform fit. Inakonga up to 100%, imagine. Yeah, within 30 days, which is doing very well. So that means if we can put it with some good equity money, we're going to make some serious money. Nani hiyo ni nini? Ama can you give me like a few? I call you. Niko class kidogo, nimalize tu and then I'm going to call you. Okay. Someone says hi. Niko Zoom. Wacha nimalizie then I call you. Thanks. Okay. Sorry guys about it. It's my clients. Okay, let's get started. So today I'm gonna go to analysis. We are supposed to get started with something different. Is my what do you think? Give me a minute. I'm getting my browser ready. So you're going to do more of, I'm introducing you to analysis, or what mostly we'll be doing over the course of the period or our class. So let me open the browser. Is it opened? So let me share my screen. So, and today I'll also be analyzing, tomorrow is NFP actually. So what do we call NFP? NFP is usually a time whereby traders come together to analyze jobs report from the US. So to be a big day, so we usually trade it, though I'm quite tired, but I'll be checking what will be happening to the dollar. So it's very good for you to know. And we said we also have an economic calendar. Let me share my screen. So thank you. Let's get started. Yeah, I'm sharing my screen. So I'm introducing you to 3 types of analysis. The analysis of basically what is trading all about. Why are we even here? Why would you spend more of your time learning this Forex thing? Why is it so important? So today I'm going to give you that and what mostly you'll be dealing with on a daily basis. It's a usually very interesting phenomenon because this is what happens to the world, or basically we are getting to know the world economy and how it's performing. So it's very, very important for you to pay attention to what we're doing. So I'll be using this website for today because I'm doing more of introduction to analysis. We said it's a good website. The material is free, don't even pay, but it has very good quotes on Forex. Apart from that, I had told you I have a manual. So the manual is still there for your reading because most of the things be teaching you will be based on the Forex on that manual. So this is more of a, an added notes. So give me a minute. So let's get started with our class for today. So I'll be analyzing the euro, as we had said, and also, no, we can do New Zealand today, and we can also do Euro USD. So I'll just be doing New Zealand and Euro USD on analysis. So let me put this here. So let's get started. Yeah, here. So this is what we'll be doing, the 3 types of analysis. Why are we here? Why would you really sacrifice the next 2 months before we head for the holidays to learn Forex? Because this is the future. So guys and ladies, or ladies and gentlemen, wherever you are, this is the future, because I believe you use your iPhone or you use your Android phone every day. So I believe you have a car somewhere, or you at least use matatu. When you're doing all that, you're taking part in the Forex market. Why? Because, for example, on that iPhone, the company that owns the iPhone is called Apple. So I'm going to just show you, this is Apple. So let me just show you, this is Apple. This is my favorite stock. So when I look at Apple, I'm able to know how the stock is performing. And you see, mostly it's usually on a downward, upward kind of viral time. You can see this is the stock for Apple. So if you're using Facebook, I also have Facebook here. So you guys think, so this was remember there was a crash on, was it Monday? I don't remember the day, but this week Facebook experienced an outage whereby everything went down. So you can see the stock price did what? The stock price hit down. This was almost from 383, it went down to 325 per share. Then they lost around $6 billion, just this sale alone, because now they are having too much traffic. COVID came, everyone wants to be online. People want just to always at least be on Facebook and enjoy their social media and all. So that means they don't have enough to cater for all that traffic on their servers. So what happens is there was an outage. So they have to have a lot of maintenance guys in the IT doing that. But I believe it's backup. So is Facebook backup? Yeah, it should be, because it's not supposed to go down for long. Maybe an hour or two. Even our M-Pesa here, it always has to go through the maintenance, because now you have 30 million customers all using transactions. Yeah, but you might realize it might be a bit slow. Yeah, I think it's there. So anyway, let's leave Facebook for today and get to class. Yeah, I'm seeing it's opened. So just give me a minute. So we are getting to analysis, the 3 types of analysis. Let me close Facebook for today. So what I'm basically telling you, when you're on Netflix, I'll show you Netflix is also here. So I trade Facebook, I trade Netflix, Bitcoin, all of them. So I won't go much to that. So I said today, I just mostly dwell on New Zealand. New Zealand USD is an island nation down there. And then we also have Euro USD because of Euro and the dollar, the relationship we have between the Euro and the dollar. The reason why we need to know what might happen tomorrow, because tomorrow we'll be having NFP. So let's get started to the types of market analysis. Today won't be a long class, because basically I'm introducing you to the markets, or I'm introducing you to what it is we'll be doing. So are you taking the green pill, the red pill? So anyway, the red pill. So another thing I want to note is that even after you graduate from this school, because the idea is we want you to be independent in your trading. We want you to succeed. As my job, mostly I train traders, I mentor them, make sure they are on their best game, so that at least they make money and do something with their lives. So even after I graduate from the School of Pipsology, you must constantly pursue as much knowledge as you can, because knowledge never ends. It's what happens when you start learning Forex, when you start trading and making money, it kind of opens your mind to another dimension you can't even explain, because now you get the freedom to know how money operates. Get the freedom to understand how money revolves around the economy, in and out. When you buy your bread or your milk or your cereals in the morning, you're always knowing at least this is what is happening to the market. Another thing, you're able to time yourself and make good money. Right now you have a lot of energy, so you can invest more knowledge on learning, and of course accumulating more assets for yourself and some good money. So anyway, let's go now to our day. So learning never stops. Even myself, even after all these years, still trading and making money, there's always something new to learn on a daily basis. So that is one thing, at least I wanted you to really understand. So never stop, or never say never. The learning has to continue, whether it's online, whether it's Google, whether it's PDF, whether it's physical. As long as you have your laptop or your phone, learning never stops. So let's begin to analyze. So for us to trade, basically is developing an idea, because for you to make money where you are, you need an idea, or probably you need capital. So for trading is basically developing an idea of where the markets might be going, up or down, global macroeconomics, geopolitics, and the rest. So let's go to what we'll be doing. So we have 3 ways to analyze and develop ideas on how to trade the market. So there are 3 types of market analysis. Usually there's technical, fundamental, and sentiment. So all our trading would just be revolved mostly within these three analyses. So there has been a constant debate which one is better, but to tell you the truth, you need to know all the three. So it's like a three-legged stool, as you can see. So one cannot do without the other. So somehow they complement each other. Not somehow, they do complement each other. So it's like standing on a three-legged stool. The same holds for trading. So since the stool is supposed to represent how a trader goes about thinking and analyze the market, the missing brain. So you can see it will be looking like that. So let's get started. So you'll have to use the three to represent. What do the three represent? They represent different types of thought processes. Thought processes is when you wake up today in the morning, there's how you analyze or see the day. Or probably you'll plan, I'll use this means of transport, I'll get to work, I'll do this and this. If you're working from home, probably you wake up, plan your day, do some exercise, do a shower, some breakfast, then you're on your computer. So basically what I'm trying to say, these are thought processes. For me, when I remove this chart on Facebook or Neuro or whatever, these are different thought processes of guys trying to analyze what might happen to the market. So basically, that's what it's all about. So we'll have technical, fundamental, and sentiment. It takes time for you to learn the skill. It's something I also want you to know. It's not like something you wake up and today you're good. So you need to have three brains about thinking. So basically, you're using more of your brain. For you to be good at this or be good at what we do, you're using more of your mind or your brain. So you'll have to invest a lot in your mind or your brain. I have a lot of resources, not just on Forex, even things that help you grow. So for you to really grow, you need to invest more in knowledge, books, reading more. That's how it helps you. So if your analysis if your analysis is in any three types of is weak, then you ignore, there's a chance you lose. So most of the traders out there lose because, of course, most love technical analysis, they love price action, but they tend to forget they have to complement this analysis. And that's what I want to introduce you today. So for technical, it is the framework in which traders study price movement. So what is price? This is price. This is the price here. Oh, let's go to New Zealand today. Where's New Zealand there? So this is New Zealand. It's one of my favorite pairs because it kind of trends. Inaanguka, inapanda, inaanguka. That's on D1. Let's check it on H4. So what we are saying, technical analysis is studying this price, 0.69221. Now you can see it has changed again, 2526. It keeps changing. It goes up, it goes down, goes up, goes down. So for us to study this price and what is making it to go up or down is what now we are calling what? We are calling technical analysis. So the theory is that a person can look at historical price movement and will determine the current trading conditions and the potential price movement. So we are literally looking at history, what has happened behind the back. So let me go again and have a look at what happened weekly. Can we do weekly? Yeah, we can do weekly. So what I'm doing, I want to see what has New Zealand been doing on a weekly time frame, technically from the beginning of the year. So let me change this to momentum. Yeah, this is better. So weekly, you can see it's been on a rise. So this was from last year to this year. And then from this year, New Zealand seems to be going down, going up, going down, going up, going down. So most likely going up. If I go to daily and I zoom out, then Control G, you remove you can see again what I was saying. This is D1. You zoom it again. It's been going up, going down, going up, but mostly it's been on a rise. You can see the red line. It seems New Zealand. So this is technically what I'm trying to say. We are studying this movement or the movement of this price. So that's what technical analysis mostly is all about. And we'll be using this trading platform. We call it an MT4. So we'll be using it to understand. So someone who uses technical analysis will be called a technical analyst. And those traders using technical analysis are known as technical traders. We are studying price movement. The evidence is that using technical analysis is that theoretically all current market information is reflected in price. Technical traders generally ascribe to the belief that it's all in the chart. So this simply means that all fundamental information is priced into the current market price. So if price reflects all information that is out there, then price action is all one would really need to make a trade, which is very true. So if all we need to know is the price. So when you're going to do your shopping, you have to know the price of that shoe. You have to know the price of that cloth, so that at least you bargain and get the item on a good or at a better price. And what we are looking at, technical analysis, we look at the rhythm, flow, and trends in price action. Rhythm means there's a feel, might be a wave up or a wave down. The way I've shown you, this is the rhythm. So you can see the rhythm has been more of an uptrend. So if I zoom in, the rhythm has been more of, look, it goes down, consolidates. This is called consolidation. Then goes down again, breaks almost this support level. The support level goes up, then goes down. So most likely here, we are looking at a case scenario whereby most likely it might be looking to go up, because you can see the trend has been up, down, until finally it's able to at least get to a point where it's trending. So we are looking at the rhythm, flow, and trends in price action. So you have had the old adage, history tends to repeat itself. So what? Well, that's basically what technical analysis is all about. That if a certain price held as a major support or resistance level in the past, Forex traders will keep an eye out for those, will keep an eye out for it and base their trades around that historical price level. So we are looking at the history. Technical analysis look for similar patterns that have formed in the past and will form trade ideas, believing that price could possibly act the same way it did before. We are looking at technical analysis, not more of prediction, but more of probability. And technical analysis is the study of historical price action in order to identify patterns and determine probabilities of the future direction of price. So you can see like this level, this red line, this was acting as our resistance, because you see price goes up, goes down, goes up, touches a little bit, consolidates, goes down, goes up again, almost touches, didn't, goes down. But then the moment it touched again, now this was twice retest, or the price was tested twice. Then you can see it fell down, then went up, down. It was tested again twice. So most likely price was going up. So what are we looking at? Probability. So what is the probability to rain? What's the probability to be sunny? How do you determine how you dress for the day? Of course, it has to be with the weather. So we don't really know what the future holds. No one knows the future. All we do is have a probability of the direction of the price or future direction of price. So what I'm trying to say, in the world of trading, when someone says technical analysis, the first thing about that comes to mind is a chart. And technical analysts use charts because they are the easiest way to visualize historical data. So it's more about data, pouring of data over and over again. So technical analysis live, eat, and breathe charts. That's why they're called chartists. So you can look at past data to help you spot trends and patterns, which is very true, which could help you find some great trading opportunities. So what's more is that without traders who rely on technical analysis out there, these price patterns and indicator signals tend to become self-fulfilling. As more and more Forex traders look for certain price levels and chart patterns, the more likely that these patterns will manifest themselves in the market. So you should know that technical analysis is very subjective. Just because Michelangelo, whoever is looking at this indicator doesn't mean it's going to be moving in that direction. So you learn more of things to do with Fibonacci, Bollinger Bands, and so forth and so forth. So that is technical analysis, the study of price action, or the movement of study rhythm, flow, and spotting patterns and trends. So what about fundamental analysis, where technical analysis involves pouring data to identify patterns or trends? Fundamental analysis will involve pouring over economic data and news headlines. So that's why I have this site here. So I can even be able to always, you can see we have news and latest stories. ECB's market rate hike. So this is the latest. Market rate hike views don't reflect guidance. 6 million Spaniards now live in extreme poverty. In monthly data of France, foreign merchandise trade balance -6. So these are news headlines. So that's what we are touching on, fundamental analysis. So we are looking at pouring over economic data, reports, and news headlines. And even random tweets. So Twitter has also become a very powerful tool for this kind of events or fundamental data. So fundamental analysis will be looking at a way that the Forex market will be analyzing economic, social, and political forces that affect prices. Political, why? Because if you have a good government, someone with a good plan to move the country forward, you're able to see it will be affected in the currency or in the prices. Socially, when we are going to the holidays, we're almost headed to December. Socially, more people will be spending. It's Christmas is shopping season, so prices will tend to hike. Most prices, especially of durable goods, things that people really love buying over that period of time, will be moving up. Why? Because socially, people want to be with families. Socially, people want to spend more time together. So that's one thing. Then we also have economic. Economy now is basically how a country is performing. So if you think this, it makes a whole sense, just like in Economics 101. It is simply supply and demand will determine the price. In this case, the currency exchange rate. So we are looking at demand and supply, just the way you go to a normal market. Demand and supply. If you don't have beans or potatoes, most likely the prices will be looking to go up because the scarcity of the product. So using supply and demand as an indicator of where price could be headed is easy. The hard part would be analyzing all the factors that affect demand and supply. So it's usually work. So you have to understand the reason why certain events like an increase in unemployment rate. So if you have more people who don't have jobs, how will it affect a country's economy? Monetary policy, which ultimately affects the level of demand for its currency. So the idea behind this type of analysis is that if a country's current or future economic outlook is good, the currency should be strengthening. So if our country is doing well, more people have jobs. Of course, more people have money to spend every month. So that means the currency should be looking to strengthen. So the better shape a country's economy is, the more foreign businesses and investors will invest. So if the country is doing very well, more FDIs, we usually call them foreign direct investments. Yeah, so the better, or this result to the need to purchase that country's currency to obtain those assets. So you can see a good economy, higher currency value against the dollar, lower currency value against the dollar. So this is a bad economy. So for example, let's say dollars have been strengthening and the US economy is improving. As the economy gets better, raising the interest rates may be needed to control growth and inflation. And higher interest rates make dollar-denominated financial assets more attractive. And to get their hands on this lovely asset, traders and investors will have to buy some US dollars, and this will increase the demand for that currency. And as a result, of the value of the US dollar will likely increase against other currencies with lesser demand. So later on in the course, you learn which the economic data points drive currency prices, and they do so. You'll know who is the Fed chairman, be able to analyze fundamental data, or you'll be able to understand how economic, financial, and political news will impact the currency exchange rate. Say a CEO was fired or a CFO. Of course, the stock price of that company will be going down, especially if it was a good company or there's a scandal. So technically, that's how it is. So this requires a good understanding of geopolitics and macro events. So when I had said, in case you have questions, you can always type. Just a minute. Questions can type here. So that I can be able to respond as we continue. So I'm almost done. So no need to be intimidated by words. For now, just know that fundamental analysis is a way of analyzing the potential moves of a currency through the strength or weakness of that country's economic outlook. It's going to be awesome. I really, really love fundamental analysis, because once you really understand fundamental analysis, you're able to know what is happening at all the times, especially in the markets. So let's go now to the last one, sentiment analysis. Here we are gauging how other traders feel. So I was talking about Facebook. So Facebook, say you have 1,000 or 2,000 or 3,000 friends. So the question is, how do you keep track of their lives? You know, the news feeds are always many. So now we are looking at sentiment analysis like Facebook. It's a complex network of individuals, of course, who are spamming our news feeds. So anyway, just a light note, sentiment analysis is used to gauge how other traders feel, whether it's about the overall currency market or about a particular currency pair. So earlier we had said that price action should theoretically reflect all available market information. Unfortunately for us traders, it's not that simple. The Forex market do not simply reflect all the information out there, because traders will just act the same way. Of course, it isn't the way things work. So what is sentiment? Sentiment analysis is important. Why? Everyone, we had talked about perception. So each trader has his or her own opinion of why the market is acting the way it is. So you look at the market, someone thinks it's falling. You look at the market, someone thinks it's rising. Their opinion, according to what they're seeing, is what is forming what we call sentiment analysis. So it's just like Facebook, it's a complex network, a network made up of individuals who want to spam our news feeds. So as I was saying, it's hard. So what we'll do, we'll just come up with an overall sales strategy or line chart, or just one thing that will be able to show us this is sentiment. For example, let me show you sentiment analysis with the US economy. So this is sentiment. Can you see? This is what I'm talking about. Sentiment has been, there has been a very strong bullish move on the USA 500, or this is one of the futures that is able to understand how the US economy is doing. So what am I talking about? So what I've used here, I've just used moving average, 200, especially 50, and I think this should be 20 or 2014. And I think, don't remember the name of the other one, 20 or 21. So what I need, when I zoom in, I'm able to see. So you can see even right now, the market seems to be going back up. And you can see all it needs is to break this 50% mark. Can you see this percent mark on 50? So that at least we are able to know we are back on track. So what am I talking about? Sentiment analysis. So sentiment analysis is a feel of how all these individuals want to come and make money. So kidding, anyway, the market represents what all traders, you, Warren Buffett, whether you have to 50, 1,000, a million, a billion, everyone, it represents how you all feel about, or we all feel about the market. So that means each trader's thoughts, opinions, which are expressed through whatever position they take, helps to form the overall sentiment of the market, regardless of what information is out there. So the problem is that as retail traders, no matter how strongly you feel about a specific trade, you can't move those markets in your favor. Even if you truly believe the dollar is going to go up, but everyone else is bearish. Bearish means everyone else is selling it. There's nothing much you can do unless you're one of the GS, Goldman Sachs or George Soros. Anyway, as a trader, you have to take all this into consideration and perform sentiment analysis, whether the market is bullish or bearish. So then you have to decide how you want to incorporate your perception of the market sentiment into a trading strategy. So if you ignore this, of course, would be your choice. So sentiment analysis is often used as a contrarian indicator. There are a couple of days why this is. One idea is that if everyone or almost everyone shares the same sentiment, then it's time to go hipster and trade against the popular sentiment. So for example, if everyone remains bullish on EURUSD, it might be time to go short. Why? Unfortunately, you have to go and find out. So another idea is that most Forex traders unfortunately suck, depending on where statistics vary, between 70 to 80% traders lose money. Why do they lose money? Because they don't have enough information. They go up to 90, 95%, the ones who are losing. But at least, let's say it's between 70 to 80, say 90, at least the statistics right now are better. People are becoming more and more better in trading if they come to classes like today. So it might be a good idea to do the opposite. Being able to gauge market sentiment, aka sentiment analysis, can be an important tool in your toolbox. So it's like basically you're a builder or a construction worker. They all have a toolbox. So you as a trader, you have to be armed with your tools. These are some of the tools I'm giving you. So anyway, we'll analyze the market and use it to perform all that. So which one is the best? So let's see how we combine both of them within the next 5 minutes, then call it a day. So technical analysis, we said, involves querying data and patterns, fundamental, querying economic data reports, and news headlines. So hardcore traders in the technical analysis camp will say fundamental analysis doesn't matter, FU to FA. It's already embedded in the price, which you can see. So while hardcore traders in the fundamental analysis camp will scream, technical analysis just a bunch of imaginary lines and drawings. Useless fake voodoo magic, T is best. So while folks in the sentiment, so us in the sentiment, we'll be watching them fight, the technical versus the fundamental. They are observing the two camps fight and monitoring their level of sentiment. Who has more heat? You know, where is there more heat? Which one? Anyway, so fortunately, the different types of market analysis complement each other. How do they complement each other? So let's have a look. Even hardcore technical traders will find useful fundamental nuggets to help with their technical analysis and vice versa. What do I mean? In real world markets, prices are constantly changing. They keep moving up, down. You know, those changes in prices can and do affect fundamentals. So this means trends in prices affect fundamentals just as fundamentals affect prices. So that means fundamentals are very important. And as you'll find out later, identifying trends is a huge part of technical analysis. So for you to get this big trend I'm showing you like this one, You have to really be good in understanding fundamental analysis. For you to really be able to see this kind of trend I'm talking about, you have to be good in fundamental analysis. So let's continue. So to recap, technical analysis. So, and also at the end of the day, you should trade based on the type of analysis which you are comfortable and profitable with. So don't be fooled by this. Yes, so you have to be able to understand. So let's recap. So we say technical analysis is the study of currency price movement on the charts, while fundamental analysis takes a look at how the country's economy is doing. So market sentiment analysis determines whether the market is bullish or bearish on the current or future fundamental outlook. So how do they complement each other? Let's have a look at how they complement. Sorry. Someone here is talking. Okay, let's continue. Let's finish. So fundamental factors shape sentiment, while technical analysis helps us visualize that sentiment and apply a framework to create our trade plans. As I've said, trading is purely an idea, but how are you coming up with that idea to buy or sell? Fundamental factors, those economic reports, NFP, as I was saying, tomorrow we have NFP. Let me show you, for example. So tomorrow we'll be gauging to see how many more jobs were created in the month of, let's have a look, in the month of, you can see this is 490,000 jobs were created in the month of, 235,000 were created in the month of September. So we'll be looking to see how many more jobs were created. You can see this is the forecast. This was the previous 235,000 jobs were created. The forecast is we might get an extra 490,000. So if the figure actual here comes above this, of course, we have more jobs and the dollar will be gaining. If the figure here does not come or comes below 490,000, of course, we'll be losing because unemployment rate would have gone high. So this is basically what I'm talking about. This is an employment rate. So you can see last time it remained 5.4. That was the previous forecast, 5.2. The actual was 5.2. So this was so nothing really much changed. It was almost remaining the same. So basically, what am I saying? Fundamental factors shape sentiment, while technical analysis will help us visualize that sentiment and apply a framework to a trade plan. If the dollar gains, that will be a 200, 300 pip move. You make some good money. If it loses, you can also be selling. So all historical price action and economic figures are there. All you have to do is put your thinking cap and put those analytical skills to the test. So let's now get the stool again. Now at least you can see they go in hand. So I think by now you should be able to perform an analysis to your market using the 3 analyses, and then you're good to go. So any questions? So I didn't have today so much. So I just wanted to introduce you to all the 3 types of analysis and how we'll be using them. So what we'll do now, I think, do you have any questions? So now we'll be starting on technical analysis, especially from next week. Sorry, so we'll be starting from technical analysis. I'll be touching more on the stocks. I'll touch on New Zealand. I'll touch on the dollar. I'll touch on gold. So you can see, so gold has been on a rise, 1762. Yesterday it was 1757. So it seems it's been going up, not bad. So we'll be doing more of this. Welcome, Windrose, though class is almost over. So this is what we'll be doing mostly. Sorry. Where are we? And then here. Yeah, so unless there's no more question, I think I'll call it a day for today, so that at least we can link up for class next week. So I'm going to send you the recording, then I'm going to send you a quiz to do for the weekend and some assignments. So let's link up with the WhatsApp group. So thanks, guys and ladies and gents, and have a lovely day. Bye. So let's link up next week, but I'm chatting you on WhatsApp. So thank you. Have a lovely one. Goodbye. Okay. Where is it? So unless there are no more questions, let's call it a day. What is Tigerwheat? Oh yeah, so Tigerwheat is a brokerage. They're the ones we are working with on this educational center. So they're a broker from the UK based in London, but we also here in Nairobi and all over the